What made the company popular from the start was its ability to tap into the market and sell an idea. Sun famously met with Adam for just 12 minutes before deciding to invest $4.4 billion. But Sun's belief in Neumann may have also contributed to Neumann's downfall. Beneath the facade of a successful tech company lay a company that hadn't yet turned a profit but was being hailed as a titan of industry and a founder who got drunk on the allure of being a pioneer. Reports of his use of drugs and alcohol, tirades in the workplace, and impulsive decisions surfaced. Investors were unanimously slamming WeWork as a bad investment. The IPO was put on indefinite pause, and Neumann was forced out of the company. Despite everything, Neumann walked away with $1.7 billion. From a failed IPO to a disgraced CEO, let's take a look at the story of WeWork. Co-working has been around since the 90s and had been growing in popularity since 2005. Riding on this wave, WeWork was founded in 2010. What made the company popular from the start was its ability to tap into the market and sell an idea: open spaces, collaborative areas. It was hip and fresh and didn't look or feel like a traditional office. They focused on community, drawing from their founders' experiences of growing up in communal living spaces. They framed themselves as a tech company, employing data analytics tools and other smart tech to improve the efficiency of their spaces. This led to an understanding of exactly how people use their spaces, where to build next, and how the spaces should look. WeWork found a target market and grew quickly. The company received some big backing from investors such as Goldman Sachs, JP Morgan, and SoftBank. Even Amazon invested in WeWork. In total, WeWork secured $14.2 billion in funding since 2009. Low interest rates made it easy for investment firms to pump cash into growing companies. One of these cash pumpers was Masayoshi Son, the CEO of SoftBank, who manages a $100 billion vision fund. Sun made one of the greatest investments of all time just a few decades earlier when he gave a young Jack Ma $20 million to fund Alibaba. In 2017, Sun famously met with Adam for just 12 minutes before deciding to invest $4.4 billion. Sun had found a new apprentice in Adam Neumann, and in Sun, Neumann had found a mentor. But Sun's belief in Neumann may have also contributed to Neumann's downfall. WeWork used money from its investors to amass 847 locations across 123 cities globally. In fact, WeWork was central London's biggest office occupier and also the biggest private office tenant in Manhattan. But Adam Neumann had bigger dreams for the company than just renting office spaces. Rebranding as the We Company, along with WeWork, they also launched We Live, renting furnished apartments, and We Grow, a conscientious entrepreneurial school for young children with tuition fees between $22,000 and $42,000 per year. We Grow was run by Rebecca Neumann, wife of Adam Neumann. Despite apparent success, WeWork hadn't made a profit yet. After Uber went public in May, WeWork became the most valuable venture-backed company in the United States. However, WeWork is essentially a landlord, not a tech company. They don't sell technology hardware or software, they simply rent office space and use technology to make more effective business decisions, like many companies do. This poses a problem. How is a landlord company supposed to make explosive returns and growth like a tech company? Beneath the facade of a successful tech company lay a company that hadn't yet turned a profit but was being hailed as a titan of industry and a founder who got drunk on the allure of being a pioneer. Investors began to look critically at WeWork due to the inherent risk in its business model. WeWork engages in an average lease of 15 years with a landowner, meaning they pay a fixed amount each year for the land lease. The company then charges people to use the space. If occupancy is high or property prices increase, WeWork makes money. However, if occupancy dips too low or property prices fall, WeWork can't charge as much yet still has to pay the agreed lease, causing the company to bleed money. WeWork's company structure of subsidiaries holds specific leases in different areas to mitigate risk. Still, many believe WeWork wouldn't sustain itself in another financial crisis or similar situation where fewer people are willing to rent co-working spaces. Cracks became apparent to investors as WeWork prepped for an IPO in September 2019. The problem started in January with SoftBank, a major investor in WeWork, reducing a proposed $16 billion stake to just $2 billion, citing a dip in SoftBank's share price. As WeWork began its IPO filings, investors were keen to see what all the fuss was about. During the process, a company must disclose a lot of information to potential investors, making their financials, business models, and disclosures public. This is where the suspicions of the $47 billion valuation arose. Internal documents revealed that WeWork was losing more than $5,000 per new customer. This was a terrible look for the company. As more details came out, the company's valuation dropped by nearly 80% just this year alone. The financial situation and doubts about the company's founder and CEO Adam Neumann added to the problems. Neumann had trademarked the word "we" and then had the company pay him $5.9 million in licensing fees. He moved to the United States in 2001, studied business in New York, and his previous venture was a failed baby clothes company. Neumann was an interesting character with the typical confidence to dare to do anything but also exhibited reckless behavior. Reports of his use of drugs and alcohol, tirades in the workplace, and impulsive decisions surfaced. He even tried to smuggle cannabis into Israel on a private jet. As interest in the IPO grew, so did reports about Neumann. Investors were unanimously slamming WeWork as a bad investment. The IPO was put on indefinite pause, and Neumann was forced out of the company. Despite everything, Neumann walked away with $1.7 billion while many WeWork employees faced job losses. SoftBank invested $5 billion in October 2019 and now has control of the company. WeWork's future efforts toward an IPO may prove difficult. It's a real possibility that WeWork could head to bankruptcy court. The fall of WeWork's valuation is comparable to Enron, WorldCom, and Lehman Brothers. This disaster could cause a shift in how we view IPOs and investing in unicorn companies. Time will tell with the WeWork story. That's the story of how a company went from a $47 billion valuation to having to cancel an IPO and forcing their erratic CEO out, potentially causing a shift in the perception of IPOs.